Please check back at a later time. Thank you.
We are live streaming the Aurora Cannabis second quarter 2020 results and morning here in Vancouver, British Columbia, Canada. But don't worry, we'll be live streaming the earnings call for you, and we will be live for the duration of this call. And I'm tired. I just woke up. Aurora Q2 2020 results. I just woke up. I can't believe I'm up at 4. You got me up. Aurora Cannabis, you got me going. We'll be live with the Aurora Cannabis earnings call in literally 27 minutes. We've already signed up. We might be able to ask questions. We're in. We're in on the call. I am representing Aurora this morning. And I'm tired. It's early in the morning. It's 4:32 in the morning. Good morning, everybody. Thank you guys for joining me wherever you are in the world. I appreciate you guys being here with me on this really big day. A day where Aurora Cannabis is going to be reporting their Q2 second quarter 2020 results, and we are hoping, we are praying for something positive. Darwin says, Rich, I got news from Ameritrade.
The audio webcast you are currently trying to access is unavailable. Please check back at a later time. Thank you.
They now think China is bluffing the numbers. I've been saying that since day one, man. I've been saying that since day one. I've been saying that they've been playing with the numbers since day one, man. So, yeah, I think that that's the case. Obviously, that's the case. If it wasn't the case, you wouldn't see these numbers jump by 250 deaths in a day. So I agree with you. David Sharp, good morning from London, England. Okay, we're probably going to put the Don't Panic shirt on. For now, I'll put the Don't Panic hat on. Don't panic, guys. Don't panic. We'll find a way through this. ACB will be too big to fail. David Sharp says, good morning from London, England. Good morning, David. Thank you for joining us here on the Rich TV Live show. We are live at 4:34 PST in the morning. I don't know why I'm up so early, but I think it's because I am committed to excellence. And when Aurora is about to announce their Q2 2020 earnings, we're going to have to be here. And here we are. Whether I want to be here or not, I should be sleeping. This just seems too important to be sleeping. Who can sleep when Aurora's about to report? Nobody can sleep when Aurora's about to report. Thank you guys for joining me here this morning. Let me know where in the world you are watching, and let me know if you're a shareholder of Aurora Cannabis like me. Darwin says amen. Jason Garza says coffee time, Rich. Yeah, man, you know what? I'm going to make myself a tea. Brent says, we applaud you, Rich. Thank you, Brent. I applaud you guys for being here with me early in this morning.
The audio webcast you are currently trying to access is unavailable. Please check back at a later time. Thank you.
My eyes are still glossy. I literally just jumped out of bed, and I was like, oh, the Aurora call. Aurora. The Aurora call. Here we are. Aurora Q2 2020 results. The results. So we're about 24 minutes away. Drew D says, just getting off, about to go roll up and find a play for today. Yeah, today should be an interesting day because after having a huge day yesterday, and a market melt-up continues yesterday, the market, from what I heard, was down yesterday after they reported numbers just grew exponentially for the coronavirus. So I'm very concerned about that. Gerald says, I don't believe China will ever tell the world the true numbers of people with the virus. Jason Garza says, I'm in my man cave prepping my YZ 450 for a ride at the track. That sounds like fun. Miranda says, from Illinois, yes, Aurora investor. I am from Vancouver, British Columbia, Canada. I am an investor in Aurora Cannabis. Where are you, and are you an investor? Please let us know where you are, where you're watching from, if you're an investor in Aurora, and if you still believe in the company. This is a company that has made so many people money over the years. Over the last 10 months, like most companies, they have taken a
The
huge
audio
hit.
webcast you are currently trying to access is unavailable. Please check back at a later time. Thank you.
Good morning, Fuad. How you doing, brother? Thank you for being a Rich TV Live member. David Sharp says, I've got my finger crossed for ACB today. Yeah, I think that a lot of people do. Roy says, yes, investor in Aurora, not a happy one. Yeah, it'd be very difficult for anyone to say that they're a happy investor right now when the stock has just taken such a hit. Dallas Taylor says, Riga, Latvia, and going on this ride as an ACB investor. ACB has investors all over the world. ACB has investors, I would say, in at least 50 countries, maybe even more. Five Finger Limited says ACB 10 cents US. Oh my goodness. I hope not. That's scary, man. 10 cents? Damn. That ain't good. Say it ain't so. Please. Please say it ain't so. So we are waiting for the Aurora Q2 2020 results. Thank you guys for joining Rich TV Live. Please, guys, smash the like button. So when people are looking for the Aurora Q2 2020 results, they will see this video. It is 4:39 a.m. Pacific time in Vancouver, British Columbia, Canada. 4:39 a.m. I just rolled out of bed. I don't want to be up right now. Drew D says, I agree. ACB has issues right now, but the whole sector is effed. Yep, that's true. The whole sector is definitely going through some serious growing pains. Jason Garza says, I am...
The audio webcast you are currently trying to access is unavailable. Please check back at a later time. Thank you.
Jason Garza says, I am semi-bullish. I would double down if it goes to $1. Good morning, Roy. Hey, guys, thank you guys for being here. Please, we are 20 minutes away from the call. Could you guys smash the like button so people all over the world that are looking for this can see this video and join our stream? And that way they can be a part of this call as well. Thank you guys for the 17 likes. I appreciate you guys. I know it's early in the morning. It's hard for you to press those likes. I know. But we are live streaming this entire conference call. We have signed up. We've registered as a business, part of the media, representing Aurora Cannabis. Guys, I've been talking about Aurora Cannabis before anybody else even knew who Aurora Cannabis was. I've been talking about Aurora Cannabis since 2017, before it was even $2 in Canada. We've seen them go as high as 15. Now we've seen them retract. Everybody's panicking. I'm still holding my shares. I'm not panicking. But I never thought Aurora would be where they are today. I never thought they would have these struggles. So it's disappointing for me. And I'm sure it's disappointing for you as shareholders. The question is, where does Aurora go from here? And I believe that this conference call is going to tell a lot about where they're going to go from here. Thank you guys for the 27 likes. I really appreciate it. It's much better than 10, but can we get 50 likes? We got 52 people here. Can we get 50 likes? That's the game right now. That's the game. The call hasn't even started. So the key is, can we get 50 likes out of the 52 people here before the call goes live so we can get as many people as possible in this room? Five Finger Limited says, buy US MSOs. Fuad says, done. Thank you, Fuad.
The audio webcast you are currently trying to access is unavailable. Please check back at a later time. Thank you.
Mateo Pleasant says they have already released numbers, cannabis revenue of 56 million. Yeah, that's just not good enough. That's just not good enough. That's not good. That's not what we're looking for. So I'm hoping, I'm praying that we're going to find something good on this call, because 56 million ain't going to do it. That's probably going to tank the stock this morning. If their total revenue is 56 million, can you guys tell me what you think the stock's going to do today? Because if those numbers are correct, we're going to see the stock go down today. There's no doubt about it. Roy says, let's talk GBTC, ETCG, and ZMA. I like all three. And GBTC has been on fire. So has ETCG. ZMA, Zoomaway Travel has done the opposite. It's been going down. Fuad says ACB net revenue of 66.6 million. 66.6 million. Isn't that the mark of the beast? Including provisions of 10.6 million net cannabis revenue, excluding provisions of 63.2 million, in line with recent guidance. Five Finger Limited says more goodwill, more dilution. Fuad Halal says cash costs to produce per gram sold 88 cents. Successful launch of Cannabis 2.0 products across Canada. Consumer cannabis net revenue, excluding provisions, grows at 11% over prior quarter. Beat say, I say minus 20% max. Damn, you think it's going to go down 20%? Wow. Roy say, why is ZMA going down? I just believe it's a buying opportunity. I don't think it's anything else. This is the buying opportunity. They just haven't had any news recently. I believe it's a buying opportunity, and we're going to see it go way higher. Johnny Liberty says they won't reveal how bad their losses were. Well, I don't think they want the call to be a negative, bad call. But I have no idea what they're going to reveal. That's why we're going to watch this call and see. So I'm interested to see what they're going to say. I'm kind of nervous because it's going to take a lot for them to see the stock turn around. Oh, we got the elevator music now. So we officially got elevator music. We are going to be live streaming the earnings Q2 second quarter 2020 results for Aurora Cannabis Inc. And they will be live in 15 minutes. John says, I think ACB will release some good news. I hope so. They got to do something. So far, the news that they've been releasing has only been bad. Thank you guys for the 40 likes, by the way. I really appreciate that. That means a lot. It means a lot. Some people are saying they have no good news. Johan says, what is wrong with AEMD, Rich? You know what? I don't know what's wrong with AEMD. They got halted by the Securities and Exchange Commission because they were being heavily promoted and being talked about as a coronavirus solution, which I believe they were. I mean, I heard about them through Zach's research, and so many other companies have been talking about being a coronavirus antidote. They didn't get shut down, but AEMD somehow got shut down. I don't know what to say about it. I don't know what to think about it. I'm not happy about it. But as soon as it got halted, I already knew that they were in trouble. So be very careful with AEMD. I believe when the halt is removed, the stock will go down tremendously. That might create a buying opportunity. So I'll be watching very carefully, and I'll let you guys know. Video Marketing Jacksonville says, buying more today. You're buying Aurora today? Is anybody planning on buying Aurora today? I would wait until they go lower, but you never know. Maybe they're going to shock the world and announce something big, but I'm not feeling that. I'm not feeling that that's what's going to happen, but you never know. You never know. As a shareholder, we're all hoping for a miracle. Fat Nut says, might be under $1 by Monday, which means I'll be averaging down on Wednesday. I really hope so. That, I really hope not. I hope they don't go down like that. But if they do, it'll definitely create a buying opportunity. Because at the end of the day, they're still doing $60 million a quarter. There's very few cannabis companies at $1 doing $60 million a quarter. So we have to be realistic here. It's not like these numbers are terrible. Yeah, they're not growing, but they're also not terrible. It's not like they're doing $2 million. They're doing $60 million a quarter. Five Finger Unlimited says, I have a bid in for 88 cents US, same as cost per gram. I mean, that would be an amazing price. I just don't know if it's going to get there. Silver and gold have both been doing well, and palladium. So precious metals have definitely been on the rise. Fuad Halal says ACB 98 cents could be next level. Just the thought of that is crazy. I've been watching this stock since 2017. I've never seen it lower than $1.50 in Canada, ever. So I can't even imagine Aurora at those prices, but it's possible. Wow, look at you guys. You guys are amazing. 48 likes out of 68 people. I really appreciate you guys. Could you guys smash the like button if you have not yet, so that we have as many likes as possible and we can get as many people as possible on this stream? I want you guys to be here. I want the world to know that we are live streaming this Aurora Cannabis Q2 second quarter 2020 results at 4:48 in the morning. It's early. I just rolled out of bed and went live. I'm not going to lie to you guys. It's 4:49 in the morning. It's a hella early. I still haven't even had my tea this morning or my hot chocolate. I don't drink coffee. But I'm committed to the people. I'm committed to the community. And as soon as I heard that I had an opportunity to bring this to the people, and people were asking me yesterday if I would live stream it, I set my alarm at 4:15 in the morning, and I said, all right, as soon as I get a chance, we go on live. 4:15 comes up, I wake up, I hop out of bed, I'm like, damn, it's 4:15. When's the last time I woke up at 4:15? I'm like, probably never. So I'm like, all right, well, let's go live. And here we are. And guys, ain't nobody with this Aurora hat, okay? Only the true G's are repping Aurora like me. I'm a shareholder. I'm an influencer. I've been talking about Aurora Cannabis since 2017, before anybody else on the planet. I've watched this stock go from $1.50 to as high as $15 in Canada and make a lot of people very happy and very rich. Now the opposite has happened. Over the last 10 months, we've seen Aurora tumble down to the lowest levels since 2017. And the question is, does it go even lower, despite the fact it's doing 10 times the revenue than it was in 2017? 76 people here, 60 likes. I love the 60 likes, guys. You guys are tremendous. Now 61 likes. When you guys join this room, please smash the like button so this video goes viral and everybody who's searching for the Aurora Cannabis Q2 2020 results can join our stream. I really appreciate you guys. Thank you guys so much. You guys are the greatest community on earth right here, right now. 65 likes. Look at that. Incredible. Give yourselves a pat on the back. Just give yourselves a pat on the back. I absolutely love you guys. You guys are the best. The conference call is in 9 minutes. We're about to go live. We're live, but we're about to live stream the conference call any minute. We're on the line with them right now, and the call will be live in literally 9 minutes. Dominique says, here in Switzerland, it's 2 p.m. Thank you for joining in Switzerland, Dominique. Please, guys, just for fun, let me know where in the world you are. I want to know where in the world investors are that are holding Aurora Cannabis. Jim Green says, hell, I'm at work already. What time is it for you, Jim? Dallas Taylor says 2:45 p.m. in Riga, Las Vegas. Justin DeWitt says, I'm in South Africa. Wow, there are literally shareholders of Aurora all over the world. Roy is in Holland, Amsterdam. Thank you guys for joining from all over the world. Steven is in Medicine Hat, Alberta. Tom is in Denver, Colorado. Josh says, what are you expecting on the call? Any good news? I think I'm praying for some good news. Thank you guys for the 71 likes. I really appreciate it, guys. I really appreciate it. We are going to be live in 8 minutes with the Aurora Cannabis earnings Q2 second quarter 2020 results. It is 4:52 a.m. in the morning here, Pacific time in Vancouver, British Columbia, Canada. We're about to see the Aurora Q2 2020 results. We are live. It's 4:53 in the morning, and we are committed. If we weren't committed, we'd be snoozing away in dreamland. But we are committed. We are here for the people, and we will continue to be. Ruben is in Stockton, California. Oh, home of the Diaz brothers. Mad respect to the Diaz brothers. I'm a huge UFC fan, and gotta love that Stockton slap. Home of the Stockton slap. Roy says GBTC buying opportunity today. I've been talking to you guys about GBTC for some time, so I'm a big fan of GBTC. Joseph says San Marcos, Texas, working at 6:50 a.m. Well, hopefully we can stream this for you guys, and hopefully we can have something positive come out of this. Very, very recently negative situation for Aurora Cannabis. Gamal is in Brussels, Belgium. Wow. Thank you for joining from Belgium. Nigel is in New Jersey, USA. Thank you for joining from New Jersey. Johnny Liberty is in Olympia, Washington. Thank you for joining from Washington. Rob is in Big Rig, Sault Ste. Marie, Ontario. I've been to Sault Ste. Marie, Ontario. Denzel Lucy is in Sweden. Thank you for joining in Sweden. B says, we need U.S. partnerships or Canadian government not to be so short-sighted. I don't think the sector sees bullish sentiment until we get these. Yeah, it's a very good point. Josh says, why do you think the wholesale numbers are down? I don't know. Some people believe they're cooking their books. I'm not going to go that far and say that, but it really makes me wonder. I'm not going to lie. It really makes me wonder. We are 5 minutes away from going live with the Aurora Q2 2020 results. You are live here with Rich TV Live, and we are live streaming the results, despite the fact that it's 4:55 a.m. in the morning here in Vancouver. No, I'm not going to play any songs because I'm live streaming this on my phone right now. Today, we're just going to focus, no songs. We're just going to focus on this call. And thank you guys for being here, 83 of you. Thank you for joining me on this call. I'm praying for some good news, but I just don't know if I can expect good news from Aurora because lately there has been no good news from Aurora for a very long time. So it's been very, very disturbing as a shareholder for Aurora Cannabis, but hopefully something good comes out of this today. Aneen says, hello from Malaysia. Hello in Malaysia. How are you? Dynamac Beast, Pennsylvania, USA. Thank you for joining from Pennsylvania. Y says the results are already out if you didn't know. Yeah, I heard that they reported about 66.6 million in total revenue. But you know what? We're going to hear directly from the horse's mouth in about 4 minutes. So stay tuned. Guys, we have 78 people here and 77 likes. I absolutely love those numbers. I absolutely love those numbers. And we've been talking about Aurora Cannabis before anybody else even knew what Aurora Cannabis was. We've been talking about Aurora Cannabis since 2017. We saw the stock go from $1.50, which is the lowest I've ever seen it in Canada, to a high of 15 and made people, including myself, fortunes. Since then, on the last 10 months, like everybody else, for the most part, Aurora has been tumbling down, tumbling down, tumbling down. That's why we're waiting to see the Aurora Q2 2020 results. And hopefully, we can hear some positive news. Right now, it's elevator music. Now, you got to love it when we got more likes than people on the stream. 85 likes, 82 people here. You guys are just amazing. Thank you, Fuad. I appreciate you, brother. I really appreciate everything. Dennis McDonald is from St. Mary's, Ontario, Canada. Thank you, Dennis. People are overreacting with Aurora. They're acting like Aurora is reporting like 1 million in revenue. They're still doing 66 million in revenue. They're still ahead of like 99% of all cannabis companies in the world in gross revenue. It's not like their revenues are just non-existent. Revenues are there. They just need to get bigger. They need to get better. Why have they been going down? That's a good question. I haven't found the answer to that, but people believe they've been cooking their books. Maybe they've been cleaning up some of the mess from the past. Maybe that's why we had to see some of these guys go. What's on watch today besides ACB? You know what? I haven't even thought about that. I'm just focused on this call right now before the market opens. So stay tuned. But if anything else changes, I'll definitely let you know. I'm concerned about the markets today because the coronavirus announced some huge jump in deaths and huge jump in amount infected. Okay, guys, we're literally a minute away. Yeah, I'm a big fan of Grow Generation too. GRWG, guys. Another one I've been talking to you guys about for years. Victor says, what about rumors about $350 million investment from Alberta government to Aurora? It's going to help them. That will definitely help them. You know, everybody wants a piece of this pie. So if you can get a chance to be a part of this business and own a piece of the Aurora Cannabis pie, why not? So yeah, I could see that happening. Steve says, hi, Rich. Steve here from South Africa. Can't wait. Thank you, Steve, for joining, buddy. Adam says, hi from Boston. How you doing, Adam? Josh says, I'm nervous, bro. Yeah, I'm nervous too. I think, anyone who's a shareholder has got to be a little bit nervous right now. Okay, guys, we are literally about to go live right now. We're literally about to go live any moment. Smash the like button if you haven't smashed the like button. 90 likes for 89 people. I love you guys. Michael says, every time I buy a Chinese stock, an hour later, I'm hungry again. That's the MSG, bro. It's the MSG. Thank you guys for the 94 likes. 94 likes and 87 people. That is crazy. You guys are absolutely the best community right here, right now on YouTube in the world. There's absolutely no doubt about it. Anthony Rice says, I just woke up. Was the earnings good? We're about to live stream it right now. Literally any moment we're about to go live. What's the upside potential for today? If the numbers are not strong, which I believe they're not going to report strong, stock's going to go down unless they announce something that we're not anticipating on this call, which is why we're all listening. We're hoping, we're praying for a miracle. I just don't think we're going to get it, but I hope we do. I'm a shareholder. I don't want to see it go lower, but lately it's just been going down, down, and down, which is really scary as investors. Wow, we finally hit 100 people here. We got 96 likes. Can we get 100 likes before the call even starts? This is amazing. 98 likes. Can we squeeze 2 more likes? 2 more. And once we get 100 likes, I won't even mention it anymore. 98 likes. Could we squeeze 2 more likes? Thank you guys for the 98 likes. 100 likes. Look at that. You guys are the best. Okay, we're about to go live. Come on, Aurora. Let's go. Frank says, Rich, what do you think about buying oil stocks now for the future? Sector has been down a decade. Yeah, I think that could work. I mean, oil was making a move. Now it's been coming back down again. Could be a good move. I think right now, hotter asset is Bitcoin, GBTC, ETCG. I've been talking about Hive, IBIT. Bitcoin stocks have been in play. BTSC, BTCS. Bitcoin blockchain stocks have definitely been in play. And I think that that's a way to go right now. They seem to be pretty hot. Gold is hot right now. Precious metals are hot. Gold, palladium, silver, that's hot as well. And the markets continue to melt up. We'll see how the markets do today. But we're in the midst of a market melt up. Visa, MasterCard, American Express, Apple, Tesla, obviously, have all been killing it. Now, I hear that Tesla's down pre-market today, but Tesla's already been up huge. Frank says, how about Bitcoin miners? Yeah, it depends. I only really like Bitcoin, to be honest with you, and some of the top Bitcoin stocks. I'm not a huge fan of the Ethereums and the Ripples and the Litecoins right now. Not to say they can't go higher. They can. I just think that Bitcoin is the mothership. They are more than 50% of the entire market cap of all of cryptocurrency index. They are the mothership. Everybody else is measured by Bitcoin. So as far as I'm concerned, Bitcoin is the biggest and the best cryptocurrency in the world. Okay, Aurora, why are you keeping us why are you keeping us waiting? Aurora, why are you keeping us waiting, guys? We are live. You're supposed to be live right now.
Good morning, everyone.
Here we go.
And welcome to the Aurora Cannabis second quarter fiscal 2020 conference call for the 3 months ending in December 31st, 2019. Listeners are reminded that certain matters discussed in today's conference call or answers that may be given to questions asked could constitute forward-looking statements that are subject to the risks and uncertainties relating to Aurora's future financial or business performance. Actual results could differ materially from those anticipated in these forward-looking statements. The risk factors that may affect results are detailed in Aurora's annual information form and other periodic filings and registration statements. These documents may be accessed via SEDAR and EDGAR databases. I'd like to remind everyone that this call is being recorded today, Thursday, February 13, 2020. I would now like to introduce Mr. Michael Singer, Interim Chief Executive Officer and Executive Chairman of Aurora Cannabis. Please go ahead, Mr. Singer.
Good morning, everyone, and thank you for joining today's call. With me today is Glenn Ibbott, our Chief Financial Officer. Given that we just addressed the market last week with a very fulsome call on our succession plans, board expansion, business rationalization, and pre-release of certain Q2 financial information, I think this call will be a bit shorter than normal. I'll do a quick review of the quarter, including operational highlights. Then Glenn will discuss our financial results in greater detail, followed by a question and answer session. To start things off, I'd like to address the current state of the market, which I briefly summarized on last week's call. First, the past year has been challenging for the broader cannabis industry, with issues of retail constraints, evolving consumer demand, and provincial distributor inventory management adjustments. As we said in our first quarter conference call, it's important to remind ourselves that the Canadian consumer market is just over a year old and will take time to develop. But we remain extremely bullish on the long-term potential of the Canadian medical and consumer markets, as well as established international medical markets. We firmly believe cannabis is a secular growth story, but as is the case with all growth industries, we need to be patient as the markets evolve. With that as a backdrop and consistent with what we told you last week, our total net revenue, excluding provisions, totaled $67 million for Q2. We did not record some product return and price reduction provisions that Glenn will address shortly. It's worth highlighting that our core consumer revenue actually saw modest growth quarter over quarter before the impact of these returns and price reductions. We are proud of our strong cultivation capability, highlighted by over 30,000 kilograms of production in fiscal Q2. Our Q2 2020 gross margins on cannabis net revenue of 44% were impacted by the provision for returns and price reductions we took in the quarter. I'm also proud to report that our high-tech cultivation facilities continue to deliver leading indoor cash costs to produce below $1 a gram, and in this quarter came in at 88 cents per gram on the heels of 85 cents per gram in Q1. While we continue to leverage our coast-to-coast supply agreements to offer a broad range of premium consumer products across Canada, Aurora also remains focused on supplying medical patients with consistent premium products. In Q2 2020, the number of total active registered patients of 90,307 was relatively steady compared to Q1, which in the face of market challenges demonstrates the value of Aurora's products and patient loyalty to the Aurora family of brands. We are a few weeks into the second wave of legalization of Cannabis 2.0 products, and I'm very proud of the Aurora team, particularly their focus and energy around the 2.0 launch at the end of 2019. We began loading in small volumes in Q2 2020 with positive market feedback from distributors and retail customers about our product quality. Those products include vapes, concentrates, gummies, chocolates, mints, and cookies, and they are available in markets across the country. We have selectively partnered with a variety of organizations, prioritized our resources, and built the inventory to ensure that our consumers across Canada will have access to our high-quality derivative products. Our assumption is that the 2.0 market will also develop slowly, with previously discussed market constraints affecting the rollout. But the good news is we're managing the business accordingly and feel very confident about our prospects. I'd now like to turn the call over to Glenn, who will discuss the financial highlights of the second quarter, and then we'll open up the line to questions. Glenn?
Thanks, Michael, and good morning, everyone. The figures I'll be going over today can be found in our financial statements, in MD&A, and are all in Canadian dollars. For our second quarter of fiscal 2020, the period from October 1st to December 31st, 2019, we saw our net revenue, excluding provisions of $10.6 million, come in at $67 million. Our total cannabis net revenue, excluding provisions, came in at $63 million for the quarter. A bit more specifically, our medical cannabis revenue in Canada remained steady quarter over quarter at $26 million. Our Canadian consumer cannabis delivered $33.5 million, and our international medical dropped to $1.8 million. To get into a bit more detail, as I just noted, during Q2 2020, our Canadian medical cannabis net revenue came in at $26 million. Our patient base continues to exceed 90,000 clients, which, although being relatively flat quarter over quarter, is indicative of our strong medical position, as that market also faces headwinds, mainly from cannibalization into the consumer market. We continue to work at maintaining and growing our leading position and are making certain internal operational changes that are designed to maximize the lifetime value of our key patients. International medical sales declined from $5 million in Q1 to $1.8 million in Q2 as a temporary sales restriction due to a permitting issue impacted our sales in Europe. As we announced early last week, that issue has now been resolved. I'm pleased to note that our products are once again available for sale as we fill back orders and return to growing European medical from the previous run rate. Similar to the Canadian market, we expect our European business, particularly our German business, to grow sequentially, but in the short term, slower than originally anticipated. Recent EU GMP certification of our Aurora River facility with a run rate of approximately 30,000 kilograms annually, will allow us to allocate significantly more product to our export markets as they develop. Consumer cannabis net revenue, excluding provisions, was $33.5 million, up 11% from the prior quarter. In Q2, we recorded a provision of $10.6 million against revenue, which captured the impact of returns from provinces and price reductions that we'd agreed to. This included our assessment across the provincial ordering system for products still deemed at risk. The significant majority of this provision was related to products sold much earlier in calendar 2019. In Q2, we saw a pickup in ordering of 1.0 products late in the quarter, and also had a good launch into the 2.0 system with approximately $3 million in deliveries to provinces in late December. However, during the quarter, we did see a drop-off in our market share in flower as the market shifted significantly towards value brands, which we define as retailing for less than $9 per gram. Last week, we launched our competitive brand in this category, Daily Special, at a price point and an average potency that we think is a very compelling proposition for the consumer. In fact, we believe it will compete strongly with the gray market and help grow the overall size of the legal segment. We'll clearly be monitoring our performance here closely. During Q2 2020, the company generated $2.4 million in wholesale bulk revenue as compared to $10.3 million in the prior quarter. As we said before, we are opportunistic with wholesale and do not attempt to predict quarter-to-quarter revenue levels. Our average Q2 net selling price for cannabis of $5.54 per gram represented a slight decrease from the $5.68 reported in the prior quarter. This decrease is primarily attributable to the previously mentioned returns and lower per gram selling prices for wholesale cannabis. We produced over 30,000 kilograms of cannabis in Q2 as compared to 41,000 kilograms in the prior quarter. In Q2, we took decisions at the cultivation level to prioritize planting of higher potency but slightly lower yielding cultivars at our major facilities. And we also took the opportunity to conduct some R&D with potential new high THC cultivars. In Q3 and Q4 2020, we expect our continued refinement of yields and operational efficiencies to deliver production at a quarterly rate that averages 150,000 kilograms annually. Our cash cost to produce per gram of dried cannabis increased slightly to 88 cents per gram, up 3 cents from the prior quarter. We are pleased that we continue to deliver on a very important KPI for our operations, sub $1 cost to produce. This is the leverage that allows us to launch such a powerful new entry into the value market while maintaining strong, healthy, and sustainable margins. Shifting now to SG&A. For Q2 2020, we reported just shy of $100 million for SG&A versus $81 million the last quarter. The increase is primarily due to an increase in salaries and benefits from targeted corporate headcount additions and annual merit increases, an investment in consumer education for the 2.0 product rollout, and campaign expenses related to the launch of the Aurora brand. I want to stress that we recognize the importance of reducing our cost structure, and as reported last week, we have taken decisive action to make change immediately. Consequently, as we discussed last week, we expect to manage our business to an SG&A target range of $40 to $45 million per quarter, which we plan to achieve as we exit fiscal Q4 2020. Clearly, this represents a substantial decrease from today's reported number. To achieve this, we are focusing on our core operations in the Canadian consumer market, the Canadian and established international markets, and certain U.S. initiatives. An important part of this initiative is to reduce the complexity of our business and to instill a culture of financial discipline across all of our operations. As such, we believe there may be further opportunity to find additional medium-term cost efficiencies. Turning to our balance sheet, I'd like to highlight once again the amendments to our credit facilities that were announced last week. These amendments include the complete removal of all EBITDA ratio covenants that had originally been set to commence in the period ending September 30th, 2020 of 0.2 to 1, commencing in our fiscal third quarter 2020 from the 0.25 to 1 that had been in place till now. The introduction of a new minimum liquidity covenant of $35 million, and the introduction of a covenant requiring Aurora to achieve positive EBITDA thresholds beginning in fiscal Q1 2021 that we believe are consistent with our announced changes. These thresholds are mid-single digits for the first couple of quarters of fiscal 2021, increasing in the back half of the year to a total of $51 million cumulative for the entire fiscal year. We also used $45 million in restricted cash to pay down our debt and thereby reduce debt servicing costs. And finally, we downsized the total facility by $96.5 million through the elimination of Facility B, which had been earmarked specifically for the construction of Aurora Sun. When we reduced the scope of Aurora Sun significantly, Facility B was no longer available nor necessary. I should emphasize that we saw both actions as net positives for the company's financial position. Staying with the balance sheet, you'll note that we finalized the goodwill and intangible and PP&E asset impairments in our Q2 financial statements, totaling $762 million for goodwill and $210 million for intangible and PP&E asset impairments, both within our previously disclosed ranges. Turning to liquidity, as of December 31st, 2019, our consolidated cash position was $156 million, excluding the $45 million of restricted cash. We had used our at-the-market financing program and had raised gross proceeds of $325 million in the period from July to December 2019. We have roughly $200 million remaining under the existing ATM program. Our announced reduction in CapEx and SG&A costs should provide comfort to our investors that we are laser focused on the health of our income statement and balance sheet. We expect the utilization of the remaining ATM capacity should be sufficient to fund operations and remaining capital expenditures to the points where positive EBITDA and free cash flow are achieved. Driving Aurora to be a profitable and robust global cannabis company is extremely important to our team, as our call last week demonstrated. Our goal is to manage the business with a high degree of fiscal discipline, and we look forward to sharing further developments and progress with you in the coming quarters. I'll now turn the call back to Michael.
In conclusion, we continue to focus on what we can control in an evolving market: consistent execution, operational excellence, and our focus on operating a sustainable business. And in turn, that short-term focus will allow Aurora to be a leader as the global cannabis trend takes hold and numerous exciting markets develop. I have no doubt that we have the right team and the right plan to execute against that opportunity and position our shareholder for value creation, especially from these levels. I'd now like to ask the operator to open up the call for questions.
Thank you. At this time, we will be conducting a question and answer session. Please limit yourself to one question and one follow-up. If you would like to ask a question, please press *1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press *2 if you would like to remove your question from the queue. For those using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we pull for questions. The first question is from Vivian Azar of Cowen. Please go ahead.
Thank you. Good morning.
Morning.
So I just wanted to touch on your comment around the rollout of 2.0. It makes perfect sense that the provincial boards are taking a more cautious approach, as are you as you collaborate with them in terms of inventory load, given some of the write-downs that we've seen from you as well as the industry. But I think it would be helpful to understand what your current capacity run rate is, because it's pretty striking to me that edibles seem to be fairly consistently out of stock. Where they are in stock, it seems to be that you guys have chocolates available, but it's kind of few and far between when we've been, both on the website as well as in brick and mortar. So where are you from a capacity standpoint on edibles, specifically from a 2.0 standpoint, and how would you anticipate that run rate evolving? Thanks.
Sure, Vivian. Where's the run rate going? We haven't found the upper limit on the gummy demand yet, but I do have to say that it is constrained somewhat by the provincial ordering. There have been a couple of, hiccups as we've gone through this. We had, one fairly minor, short-term extraction issue. That line is back on. We've also run into a few issues of packaging, et cetera, just the usual kind of scaling up types of items. So those are behind us. It looks like we're kind of in full production right now. But again, the gummies are selling out as soon as we can get them to the provinces. The provinces are ordering in a very, prudent way, I think. They're rather stock out as opposed to being overstocked. So it's a little bit early to figure out exactly how, where the upper limits are there. We don't have constraints on our lines per se. I mean, at least at the anticipated levels. We do have plans for larger scale lines that are in place in our new Polaris building as needed. So we'll introduce that higher capacity as the market develops. What we're trying to do, as we've talked about before, is be more prudent with our capital, make sure we spend it as we see the demand. I don't see any constraints on our production capacity for the next number of quarters. And by the time we get to that point, we'll have introduced higher capacity if we need it.
Well, that's helpful. Thank you, Glenn. But maybe we could just quantify that a little bit. So in terms of what you're able to produce versus what you're able to ship, are you guys running at, an 8-hour shift full utilization and you're building inventory and then you're only shipping 10% of what you produce? I'm just trying to get my head around that.
I don't have exact numbers for you, Vivian. I will track them down in terms of percentages that are shipping versus what we're producing. I know, we've had some of the ordering is, it's interesting to watch the week by week ordering. There'll be weeks that are 100% above the previous week and then drop down again back to 50%. Very, I won't use the word volatile, but very early stage, and I think everybody's kind of feeling which products are moving. So we can follow up with specific sort of utilization rates at the lines right now for you.
The next question is from Chris Carey of Bank of America Merrill Lynch. Please go ahead.
Morning, Chris.
Morning. So I guess, for my first question, I'm just trying to understand why, $45 million in SG&A is the right number, or more specifically, how you're thinking about the ability to flex down that cost structure if needed. And I guess underlying that question is, if gross margins, stay at this current level, and I understand excluding the provisions, but even then, the gross margins have been coming down, which seems to be the trend if the category is increasingly going into value, which would imply that you're going to need pretty significant acceleration in revenue to kind of hit that EBITDA positive for fiscal Q1 21. And so just really simply put, I guess what I'm trying to get at is this concept of you might need to actually flex down that cost even more, and maybe just how you're thinking about your capacity to actually make those changes to hit that fiscal Q1 21 EBITDA covenant, if indeed you have to do something like that. Then I have a follow-up.
Yeah, Chris, I mean, that's the key question. We've been spending a lot of time on that. The targeted rate that we put out there in terms of coming out of Q4 and into Q1 is a point in time. We have targets for Q4 itself, and we have further targets past into Q1 and, in fact, into Q2. So there are some changes we can make to the business that we made immediately. There are some that require negotiation with other parties. We think we can have in place for Q4 And then there are other actions that we can take that will, impact the company's cost structure in the fall. I don't want to get into specifics because they all require, most of them require negotiation with other folks, or they require us, repositioning some of our assets. I think the key when we look at the company is about reducing complexity. And if I can decode that a little bit, what we're really talking about is that the fundamental, what drives the cash flow and the profits of this company in the future are what we described, again, core Canadian cannabis in medical and consumer, and certain international markets that have, sort of near-term potential. And that's, as it stands right now with this group of assets, that's what we need to focus on. For various reasons, just in terms of better the company, the industry, and developing Aurora where it's at today, we do have a lot of complexity in the business and lots of non-core parts of the business that we're looking at. How do we rationalize that? How do we streamline this business and just spend our energy and our focus on that core business that's going to drive the cash flow and profit? So to your point, do we see further opportunity? Yeah, we do. But again, it's a matter of timing, and that's why when we work with our syndicate of banks, we set EBITDA covenants that kicked in fiscal Q1, or EBITDA threshold, and started off modestly and moved forward. The other part of your question, I think this is important. I don't want to go on too long, but this is an important part. We are being prudent with our revenue projections here and constructing the company to meet those prudent revenue projections. But listen, there are upside opportunities here. We just want to make sure we've got a cost structure that those upside opportunities, should they arrive, fall to the bottom line instead of getting consumed by SG&A. So that's what we're doing there is continuing to drive costs out. I hope you don't take for a moment that we don't believe in this market, and we believe that there'll be some good news. We went through a year with a lot of sort of negative news in the industry, but we believe there will be good news, whether it's Alberta approving vapes last week or just, a stronger cadence of retail stores, or Ontario going out for consultation on vape lounges and things like that. That's upside. We want to build a company where that's upside, and we're not dependent on that showing up to be EBITDA positive. If it shows up, excellent. If it's more EBITDA is not getting consumed in corporate overhead.
Okay, thanks. And then I guess for shifting gears a little bit, over the past couple quarters, so you've produced about 50,000 kilograms more than you've sold, right? And I guess with the expectation for cannabis revenue, excluding provisions, to be flat quarter over quarter, the still slow store rollout in Canada, it's progressing, but slowly. I mean, it seems like this dynamic of producing well above what you're selling is going to sustain. I think that leads to an important question, not just for Aurora, but for this entire industry. And I guess that question really is, when would you consider maybe shuttering capacity, or at least slowing the rate of volume that's coming off your production line? Because you're still, if I understand your comments in your prepared remarks correctly, looking for about 38,000 kilos of quarterly production, which will continue to materially outpace what you're selling. And I just wonder when we, see the individual companies or the industry starting to take a closer look at just how much volume they're bringing into this market relative to how much the market can actually withstand. Thanks so much for that.
Yeah. Yep. Absolutely critical question for us and the rest of the industry. We're actively, we've got some projects underway to really evaluate the impact under a number of different scenarios, and also under new product launches. Don't forget, we haven't launched all the products that we can under 2.0 legislation, and as those come out over the next several months or several quarters, we're looking at consumption distribution there. Some of them are higher consumers of say, trim and things like that. So, we will evaluate. We are evaluating it differently, and we'll update you if we come to a conclusion where we need to reduce the level of production within the company. The point, and Michael's emphasized this a lot, is fiscal discipline. Certainly we had a view at one point several years ago that the market would have developed to the point where we could, certainly out of our existing assets, we would sell whatever we're producing. So now, in the short term, that's not necessarily true, but we'll see as we introduce some of these new products and see what the demand for those new products are. But rest assured, something we're paying really close attention to, and we're definitely looking at everything in this company through a fiscal lens. So we won't allow that situation to persist if it doesn't. We don't see our ability to consume that inventory.
The next question is from Owen Bennett of Jefferies. Please go ahead.
Morning, guys. Yeah, a couple of questions, please. First of all, don't want to labour the point on SG&A, but it seems quite an aggressive target. I was just wondering, which would be helpful from our perspective, if you could put those different buckets you identified, you could quantify them in terms of how much savings you see coming from each. And then my follow-up is just around the daily special launch, what price point that's coming in at, and in your internal projections, are you assuming any cannibalization of the mid-price brands with daily special when that's launched? Thank you.
Yeah, Nolan, thanks. I guess when we look at SG&A, it's probably worth remembering that just several quarters ago, we were running in the $60 million range. We ramped up significantly as we, as I say, as we took on a lot more activities with the company and tried, in fact, to accelerate the development of a number of things, whether it's internal IT projects or some of the marketing initiatives. So we ramped up from a rate that, say, Q4, Q3 of last year was in the $60 million range. So it's not inconceivable to get back down to that range relatively easy. And then the next steps are basically reducing complexity, which means saying no to a number of things. We've been a very aggressive company, so we tend to work to achieve an awful lot in a short period of time, and again, that just drives costs up, as opposed to prioritizing the stuff that's focused on the core of the business and certainly deferring some projects. So I understand from the sort of current level, it is an aggressive target. It's an important target, and say most of the changes that we made last week get us significantly closer to that target. It may not be evident, but if you remember last week, we said our corporate headcount, we reduced it by about 25%. So we're there out of 100 million. You can see where our driving costs are right there, plus a number of initiatives. I don't want to get into details on how much in IT or HR or marketing that we've taken out, but we definitely have taken out a lot there, and significantly reduced the burden of some of our subsidiaries as well. In terms of the daily special pricing, we've analyzed all the entries in the market, and it's the lowest pricing per gram. And it's also, when you look at an important metric that seems to have developed in the market, it's THC per dollar. About THC per dollar, basically what you're getting for high potency product. Again, is the best metric of the competitive product. So, it depends, depending on pack size, and then go up to currently up to 15 gram packs, and it depends on the province exactly what the pricing is. But if I'll leave it there, as it stands right now, I believe it's the sharpest pricing in the amongst all the competitive offerings.
The next question is from Michael Lavery of Piper Sandler. Please go ahead.
Hi, this is Jeff Cracky on for Michael. Good morning.
Good morning.
Just one question from me. As you resume sales in Germany, have you seen any impact to distribution after having sales paused?
Well, there actually was a backlog or a set of back orders. And we were continuing to ship there. So just to be clear, this was I'm going to characterize it, although it impacted us in the quarter, as a relatively minor issue. We continued to ship to Germany and build up the inventory there. We were building up back orders, and then we started fulfilling those as soon as we had the permit to actually ship to the pharmacies with that product. So, yeah, of course, there's a little bit of catch-up to be done here, but we don't think that we've lost much ground there. We'll regain it fairly quickly, and quite frankly, like the story with the rest of Europe, it's not there's not strong competition there right now. So we should be back on track shortly, as I say, fulfilling back orders and then getting back into the regular cadence.
Okay, thank you. That's all for me. I'll pass it on.
Thank you.
The next question is from Pablo Zuanic of Cantor Fitzgerald. Please go ahead.
Morning, thank you.
Morning, Pablo.
Just,
Morning.
my first question is more like a comment. I mean, obviously, you are telling us all the right thing in terms of you restructure covenants, you're cutting costs, you're adapting the company to a new reality. But there's no guidance, right? So if you provided more specific guidance and almost a guidance bridge, I think you would help curtail this crisis of confidence that the stock reflects. Okay, you're giving us numbers, we're trying to put them together, but the market doesn't buy that. So hopefully at some point you can provide a bridge, because without it, I don't know how the stock stops sliding until, of course, you show results. But that's just a general comment. I have two questions. One, if you can just talk about 2.0, because it's flat. So what does that mean in terms of 2.0? Is 2.0 like 5%, 10%? You have to have some visibility. And then how do you see the market progressing? There are other companies out there saying 2.0 could be a $1 billion market in a year's time. Do you believe that? So and describe your competitive position in 2.0. So that's a question, just more color in terms of how 2.0 can contribute to the company this quarter and going forward, in a context that from your guidance doesn't seem to be contributing. If you can just give more color on that, and then I'll have a follow-up. Thanks.
Yeah, so I'll just disagree with some of your comments and provided clarity over our targets on those things within our control. And as you'll know, for the last couple of years, the challenge for anybody putting guidance out on the revenue line is by and large they've been wrong. And that's even I'm not just talking about Aurora, I'm talking about across the industry. And they've had to rescind guidance as the development of the market is kind of taking its pivots and turns, and it's kind of a bit of a choppy road on the way from here to there. We are bullish on the long term, so I'm not going to comment on various analyst projections for the size of the market, but we definitely haven't seen, and we aren't backing off where we think this market can be. But the question is the road from here to there, and how long will that take? So again, back to being prudent with a cost structure that will allow us to be profitable on the entire journey, as opposed to hoping for a doubling of revenues to become profitable or not. We don't want to be in that position. So listen, I don't want to get into the trying to project revenues in a brand new market, in the 2.0 market. What's happening in Q3, where we're adding to fairly modest growth, is, as I mentioned in my comments, the market on the 1.0 products has taken a hard turn to the value side. It was at 2% of the market in the summer and 17% of the market in December. Meanwhile, what we characterize as premium went from mid-30s in the summer down to 17% of the market in December. So hard turn. We launched our product, as I just described, Daily Special, last week. We've been shipping to the provinces. I think BC got their first batch yesterday. So it's underway. But in terms of this quarter, we're suffering by not being in that market for January and the first week or two of February. So we didn't have half a quarter there of being in the market that seems to have the most momentum. As we look at Q3, we think that approximately 20% of our sales will come from 2.0 products. But again, trying to be prudent because it's awfully hard to extrapolate from a week-to-week projection. I mentioned to Vivian when she asked the question, I look at weekly sales in 2.0 products, and then we'll double from one week, and then we'll drop off the next, and then they'll pop up again. So way too early to project there. So we're really just trying to be prudent and make sure that if there is additional revenue coming in, it drops to the bottom line. So I hear you on the lack of visibility on revenues, but I have to tell you, we're trying to learn from the experiences of the last year or two in this industry that it seems a bit pretty risky to be trying to predict a market that is just in the early stages of development.
Understood. That's very helpful, Glenn. Thanks. Look, just a very quick follow-up. And I know this is more medium, long-term, and maybe not relevant today, but when I compare the Canadian market with a lot of the reg markets in the U.S., obviously, as we all know, the Canadian market has significant restrictions that have prevented this growth or have curtailed the growth. Do you see any room to, lobby the government over the next, few months or even year to be able to make some changes that will help the market, whether it's in terms of marketing, the way things are communicated, online, retailing, distribution? I'm not just talking about opening more stores, but just in terms of the restrictions, which I think have hurt the market compared to what we see in some parts of the U.S. Thanks. But just which one?
Sure. So listen, we'd all love to do that, of course, right? It's difficult if you go into a Canadian cannabis store. It's hard to distinguish sometimes between the different products, and that's why the in-store marketing and education of the bud tenders and stuff is important to us to make sure that they understand our products and that they're able to talk intelligently to consumers that want to come in and find a product that meets their needs. That'd be delightful. I have to tell you, I don't think that's in the near-term cards in Canada. Again, it's the beginning of the industry. I think they're focused on the I'm going to call safety first side, and then seeing how it plays out. There are promising indications when you see some of the provinces starting to consult about things like vape lounges and lounges where you can consume cannabis. That's a nice step forward to more sort of a rational, almost a model that you see in Canada with either alcohol or something like that. So, Michael mentioned it, we're only a year into legalization, a little past a year into legalization, just a month past 2.0 legalization. So I think the focus right now is on getting the foundation right, and then I guess we'll see where it can go. But we're certainly not banking on that in the near term.
No, and I'll just add that our government relations group are working very hard with the provincial distributors and governments because the purpose here is to try to remove as much as we can out of the black market into the regulated market. And the last numbers I've seen says that the black market is still a $5 billion annual opportunity, and the regulated market is somewhere just below $1 billion, or approximately $1.5 billion. So you can see the potential there. And the provinces do want to sort of shift that over to the regulated market. So our team are working hard. There is an appetite certainly to try to do this as quickly as possible, and we are working as quickly or as efficiently as we can with the provinces to make this happen as quickly as possible.
The next question is from Matt Bottomley of Canaccord. Please go ahead.
Yeah, good morning. Thanks for taking the. How are you doing? Thanks for taking the questions. I wanted to touch base. This isn't necessarily a new phenomenon we've been seeing, but my guess is that we'll start seeing the impacts in subsequent quarters for dried cannabis bud. So can you give any color on how you look at your current inventory balance, which I think for just the dried cannabis stock is about $130 million, versus the surge in what we've been seeing in dried cannabis that's in various wholesale channels right now? And what should the analyst community as a whole, be considering right now with respect to what could occur, whether it's commoditization of pricing versus a lot of this product going into Cannabis 2.0 production. It just seems like it's been this lingering potential disaster for a couple of months or quarters now, and I'm just curious if you could touch on that a bit.
Yeah, I can get started on that. Well, yeah, it's been an issue since the sort of the middle of last year, I guess. So people looked across the inventories in the industry and tried to figure out, what are they comprised of? How much is at risk? It's just definitely a different differentiation between the quality. We'll say that whether that's defined by the consumer's experience or the levels of THC, whatever, quality cannabis, and just I think what is a significant amount of lower quality cannabis destined for extraction in the industry. That's a bit of a challenge. When we look at our inventories at the end of December 31st, we definitely, even under I'd say relatively pessimistic scenarios, we will be consuming all of that, over the next several quarters. So we're not concerned about our inventory as it sits. There was a question earlier about levels of production. It's certainly something that we're watching. There's no, it will depend on how our demand plan develops. But we don't have any particular issues in our inventory as it stands at December 31st. So I can't really comment on the rest of the industry, but I do take to the point that it's a developing issue if you're not able to move that, or if you're not producing the quality that the consumer is looking for. Now, it's really clear that if you're selling flour, so if it's not going into extract, if it's going into flour, then it better have a high level of THC for the most part, or it's not going to move very quickly. So.
Understood. Thanks. And if I could just dovetail that into another question just on the international side of things. So what a lot of LPs have been saying, certainly over the last year or so, is that any sort of excess in capacity for domestic consumption when it comes to inventory could eventually go into international channels. So outside of Germany, I'm just curious if you have any allocation of your product pegged for international export, and given the quantity of the goodwill write-offs that we saw on a couple of those assets, I'm just curious how much capital is going to be allocated internationally going forward, if there's some sort of range for that, and what regions you think are more promising than not.
Yeah, I'll let Michael address the capital allocation, but no, listen, with our three facilities, particularly with our rubber facility just being certified EU GMP, we've got plenty of capacity to serve international markets for the next while. I wouldn't want to tell you that the international markets can consume all of that capacity by any means in the short term. There are developing markets, in Europe. We're seeing some though that are looking for domestic production. Some of the Dutch tenders are kind of going that way. But I think that's, as we said, it's a great long-term opportunity. It's developing a little slower than we might have anticipated a couple of years ago. There are other bigger markets that are putting in systems. Brazil, for instance, putting in a medical system. Regulations, I think, for the next several months should be clear and in place. Looks like it'll mainly be a sort of a CBD type system, but it's possible that we may supply that from our current facilities or maybe some other, but we'll be careful. Maybe Michael, you want to talk about capital allocation, international opportunities.
Sure. So I think part of what we announced last week and the important discipline that we've now sort of instilled in our business is we're going to be very cautious about how we allocate capital, and that capital allocation has to provide us with a near-term return that we think is going to be impactful to our business and beneficial to our investors. So with regards to international markets, we're obviously going to focus on key markets that generate revenue today, but always look at opportunities and investing capital in additional markets where we see that near-term value, translating directly to our P&L and, of course, our balance sheet. So we'll be very careful and methodical about how we allocate that capital to ensure that we see that immediate value to our story.
The next question is from John Zamparo of CIBC World Markets. Please go ahead.
Thanks. Good morning.
Morning, John.
Good morning. Morning. My question's on pricing and gross margins. So even after adjusting for the provisions, gross margins are down across the board, including on consumer. And granted, you've talked about the market's pivot towards value and the launch of Daily Special, but when we see average price per gram coming down, is it more a function of mix or price deflation? And I guess what I'm getting at is, are you seeing price compression even on your premium products?
Okay, so quickly, no, not on the premium products. By and large, I think San Raf and a few of the others are holding up really nicely. We were impacted, although it doesn't seem like a significant amount of revenue in the overall picture. The revenue in Europe that we didn't pull in this quarter is pretty much all gravy. The actually costs of getting the product over there not as significant as you might expect, and as you know, we get approximately 2 or better times price in Germany as we do for comparable products here in Canada. So that did impact some of the average pricing. I think we break this out in our MD&A. You can see a wholesale bulk was down significantly, and that characterized it as lower potency product. There. So the prices seem to be holding up actually fairly well. We did have to take some price reductions on the some of the inventory that was out in the system that was lower THC, but we're not producing those cultivars anymore. We are producing the stuff that is in demand in the market. So we're looking forward for sure. The pricing we're offering on the Daily Special, as I mentioned before, extremely competitive. We are taking advantage of our ability to produce at a very low cost. That will impact average pricing, but we would expect them to see a significant a strong uptick in volume. So we're just being cautious about exactly what that looks like until we get to that point. But we, internally are very excited to take advantage of this. There's a reason why we put a lot of capital into our facility over the last several years. And, some of it is scale for sure. But we said for well over a year that with these facilities and automation and ultra low level cost of production of the quality cannabis, of delivering the 18+% THC cannabis that's going to sell at a very low cost was meant to allow us to thrive in any market conditions. As usual, in the cannabis market, those market conditions arrive quickly. So, this, I think, launch of Daily Special as our first sort of value brand will be a very important test for us of that. We see extreme price elasticity in that market, and if you can offer meet the consumers' needs with the higher THC levels on a consistent basis, and offer them the best price, and the products seem to move. I'm sure you've seen that in your analysis of the market. The new entrants came in at lower prices and grab quite a material piece of the market very quickly, simply based on pricing and a minimum acceptable level of potency.
Okay, that's helpful. Thanks. And then my second question is more housekeeping. What are your expectations on working capital investments for Q3 and Q4? And is it fair to think that there are incremental investments to be made given the launch of derivative products and now presumably a ramp up in vape products in Alberta?
I think that is true by and large. As I mentioned earlier, we do need to keep a very close eye on how demand is developing and what we're putting into our production side of the house. So in terms of the inventory, continue to build a certain inventory types. But I think Vivian mentioned earlier, there are a number of our product lines that are selling out very quickly. So that's not we definitely need to continue to invest there. So there may be some incremental working capital build over the next while. We will, of course, be driving costs out of the SG&A side. So I think, overall, I think we should be in pretty good shape in terms of our investment in working capital.
The next question is from Graham Crandler of 8 Capital. Please go ahead.
Morning, Graham.
Good morning. Hi, good morning. Thank you for taking my question. I wanted to ask a question regarding the search for a full-time CEO. Michael, you mentioned in the prepared remarks the difficult period that the industry as a whole has been going through. And in light of that, I was wondering if that gives you any concerns about finding the right type of candidate, attracting the right type of talent. Has that given anyone any sort of pause in terms of entering the industry at this point of its life cycle versus what the expectation is and what we've seen in terms of migration of talent 6-12 months ago? Thanks.
Sure, Graham, and good question. And yes, it is something that we initiated obviously prior to the announcement last week. We had very active discussions going into last week's announcement. And we were confident that with last week's announcement, we would get additional inbound interest, which we've actually seen this week. So we're encouraged about the status of those ongoing discussions. We're not committing to any time. These discussions do take time, but we're very encouraged by the level of interest that we're seeing, and we're very confident that we're going to be able to find the right long-term permanent CEO that certainly is going to be impactful for our business going forward, and obviously we'll update the market and our investors as we show tangible progress with regards to that search.
Okay, thank you for that. And just to follow up quickly, do you have any sort of hard and fast criteria that you're looking for? And with that, is there a separate committee, search committee that's been established? How's that decision-making process being held? Thanks.
So the answer to those two questions are yes. A number of our independent directors are playing a very active role in this process, and so we have a lot of hands on deck at the board level to make sure that we certainly attract and secure the right talent going forward. We're taking a good look at our business today and where we anticipate our business to go into the future. And so what we're looking for is a skill set and obviously an ability to lead this organization into the next generation of products. We see this moving towards more cannabinoids, CPG sort of focus. So you're going to probably see somebody that has experience in all of those areas and be able to sort of support the business in its as we look at it going forward.
This concludes the time allocated for the question and answer session. I would like to turn the call back over to Michael Singer for closing comments.
I'd like to thank everyone for joining our call. We look forward, of course, to speaking to you in the next quarter and providing you with more updates. Have a great day. Thank you.
This concludes today's conference, and you may disconnect your lines at this time. Thank you for your participation.
Holy smokes. Holy smokes. I'm going back to bed. I've never seen anybody finish off a conference call like that in my life. I've been doing conference calls and videos and meetings and working in business for 20 years. Never in my life have I seen anybody end a conference call like that. Never. I don't know how you guys feel about this, but I'd love to have your guys' comments. If you haven't smashed the like button, 160 likes is pretty amazing. If you haven't smashed the like button, please smash the like button. Comment down below. If you haven't subscribed, subscribe for Rich TV Live to get access to these types of videos as they happen, live and interactive. I had to get up at 4 a.m. I'm going back to sleep. Thank you guys for watching. This is your boy Rich from Rich TV Live. If you're not winning, you're not watching. We bring you the winners and we bring them to you first. I think Aurora Cannabis is too big to fail. I think Aurora Cannabis will be a success. I actually think that these guys sound more like financial guys. They don't really sound like marketing guys. So I kind of like that. Yeah, they're boring. They're not exciting. They don't get you excited. But you know what? They keep saying that they're focused on profitability. They keep saying that they're focused on generating revenue. They keep saying that they're focused on the bottom line. That's the right way to be. Right now, they need someone who is focused on profitability. They need people who are focused on building the bottom line. So at the end of the day, they're saying the right things. The question is, will they do the right things? Stay tuned. We'll continue to watch. We'll continue to observe. We'll continue to see what's going on. Aurora Cannabis, I have a message to you. You guys need a strong leader. You need someone that's not going to panic. I'm throwing my name out there. Rich TV Live for CEO of Aurora Cannabis. I'm an investor. I'm a shareholder. I've been telling your story since 2017. I watched you guys go from $1.50 to $15 and be the darling of the cannabis sector. I've seen you guys go from being a no-name company to the most highly traded stock on Robinhood. But you guys need a fearless leader. Consider your boy Rich from Rich TV Live. We've been doing this since 2017. I know your products. I've tested your products. I've seen your products. I've been coast to coast across Canada. I'm the man for the job. I'm just putting my name out there. If you guys want to win and you want to turn around the ship, think Rich TV. All right, guys. Have yourselves a great day. This is your boy Rich from Rich TV Live, and I'm out. Peace. Aurora 2020 Q2 conference call is officially over. Thank you for watching. If you're not winning, you're not watching. We bring the winners, and we bring it to you first. Since 2017, check the statistics. Your boy's been talking about Aurora Cannabis. That's all I got to say. I'm out. Peace. And thank you guys for watching, and thank you guys for joining me this morning. I'm going back to bed.